Hey guys, I'm just waiting for more people to get back here. The previous live stream there was a problem, but now I fixed it, so I'll just give it like 10 more minutes to get people to come here. Hello guys. Can you guys hear me? I think there are over 40 people watching right now. Oh, over 100. Okay, that's a lot. Anyway, yes, I see a lot of people watching. Okay, so what this is a free live session for you guys. Never done this before. This is my first time. So send me your questions to my email now. Send me charts, send me everything. I already got some emails before that, so I'm gonna start answering them first, little by little, and um, then I'm gonna answer the new questions. So first of all, I told my students to sell the market on usdjpy and some other pairs. It wasn't just USDJ, but we'll start there first because someone had a question. Why did you sell the market? Sorry, why did you decide to sell the market on? What was the question again? Why did you decide to? Where is it? Where is it? Where is it? Still on the market. Anyway, I sent a signal to sell the USDJPY and asked me why did you decide to sell the market. So what I'm gonna do is let's go to the 4 hour and no, actually the 1 hour. Yep. Move back like this. So the reason why I decided to sell the USDJPY was I saw a pattern. Okay, it wasn't like, oh, how do I put it? There was a specific analysis done. It's just a pattern, and this is from experience. I saw that the dollar was getting weak. Only students know how I saw it. And the yen was getting stronger. And if the yen is stronger than the dollar, that's when you see the USDJPY go short because of the strength. Okay, if dollar is stronger than the yen, you see USDJPY go long. It's the same for every pair. If you're looking at euro USD, is euro stronger than the USD? Maybe because of economic events. Obviously, the euro is stronger than the USD right now if we look at the exchange rates. But the exchange rates can also change, can also be bigger, it can also be smaller. For example, if euro US 1 euro $1 to USD was 1.2, it can also become 1.1, it can also become 1.3. Okay, it all depends on the strength based on what's going on in the economy at the moment. It can also be based on a cycle. Anything can happen. Okay, it can be war, it can be sudden news which will just make the market move temporarily and get back to its right position. Anything can make the market move. Okay, and the reason why the market moves is because this is real money. Real things are always going on. For example, like during the holiday periods, you probably notice with some peers during this end of December period to the beginning of January, the market may just have this kind of move where it trends and then consolidates, then trends and then consolidates. It's not really gonna trend, pull back, push forward again, then pull back, and like you know how trends go, up, down, up, down, up, down. Same thing when they're going down, up, down, up, down, up, like a staircase. And that's how trend normally moves. You can't argue with it. That's just how it moves because it's gaining strength, then it's having a pullback, volume, then it has to check the market again. Is it still strong? Then it continues with that direction. That's the reason for the pullbacks and the consolidation. They are evaluating the market to see, oh, is it still strong? Should I keep pushing on? Is it still weak? Should I keep pushing on? It's evaluating. So what I saw was a push in the trend of the market, then a pullback. Then what should continue normally was like this. This period, I'll put it like this. This period was what I'll say is the test period. It's checking. Okay, is the market still strong? Is the market weak now? Is the dollar strong? Is the yen stronger? Taking its time because it's still on a long trend, so it's taking its time. But this is still like a mini consolidation. Okay, now when it came here, because this was the high of the previous day, normally what is it supposed to do? If it continues on the trend, it will break this point because it's had its pullback already. It will break this point and keep pushing forward. It didn't break this point. Okay, that's day 2 marked. Day 3, it didn't break this point also. So what I saw was a trend of lower highs, lower highs, lower highs, which to me would have been a very good point to start selling, because you have a low risk, a very high risk to reward ratio here. Okay, because if it starts going short, it's going to break this point right here. Okay, which is the beginning of a downtrend, and the next target will be this point right here, because those are their lows. It doesn't look like because I'm doing it on the 1 hour, but if you look at it on the 4 hour, you can see a push up here, here. So that is what I was expecting, and that is why I took a short. Okay, very high risk to reward ratio. Stop loss was about, was it like 10 pips or something to go short. That was my reason for going short. It wasn't like, oh, I use the system A or system B. It's just experience and looking at the market easily. Anyone can do that. You can do that on any pair. Okay, you know the significant high right here when it was on a long trend, and this point has to be broken for a continuation of trend. Okay, for every high, when you are watching a trend, and I'm not really teaching my system, I'm just trying to help you guys. Okay, you can use it on any system. This is just basic knowledge. On any trend, don't worry about the lines. This was when I had a session with a student. Students will know what these lines mean anyway. This, this, this. Okay. Yes. So where was I? Yes. Okay. When a trend moves, this is how a trend moves. Okay. It's not about what do they do. They tell you to draw a channel and everything. Those are just, they happen, but they are usually mostly coincidences. When you are looking at a trend, you should look at it as a staircase. And what do you see in a staircase? What do you see in a staircase? If you are going up, well, what was I looking at? Let me give you an example. This is just on the 4-hour time frame. Please, guys, remember. All these lines don't have anything to do with what I'm explaining. Okay, these lines are a different thing entirely. Where was I? When you are looking at a trend, you should look at it as a staircase. Is for every push down, there's a balance spot in a staircase, right? Then there's a push down, then there's a balance space, then there's a push down. That's exactly how trends move, no matter what. You have a push down, pull back, and for every high or low that is broken, you should always expect a pullback, always. And this is one of the easiest ways to identify a trend. Learn the highs, learn the lows, and learn on this trend, where does it have to break for it to continue to be a long trend? Where does it have to break for it to continue to be a short trend? Most people are just, they'll just see a pullback and they'll think it's a reversal, but they haven't even identified the trend in the first place. Most of what you see on YouTube is, oh, how to find the point of reversal, or so everyone is always rushing. Oh, it's reversing here, it's reversing here. Some trends can go on for weeks, 3 weeks, 6 weeks, 8 weeks, and not reverse. They will just have pullbacks. It's because these things, the reason why it had a pullback back then is not the reason why it will have a pullback the next time. The reason why it had a reversal back then is not, different reasons, real world reasons. Technical analysis, yes, you can get it, but only if you are going with the strength of the currencies. And most of the time, they just give you a stop loss hunt and they continue to go to their direction. Plain and simple. Especially when they see a lot of orders there. That's why I prefer to just scalp a little and hedge. So we're gonna go through another question. Let me see. Let's see, an assistant goes up. Do you change the direction? What's that? Okay, I can't explain this. This is too much. If I explain this, I give away my whole system. But for example, a lot of people ask me, and I got this question also, how is it possible to do all this without indicators? You have to understand that, okay, I break down every single thing one by one. Let's start with the daily range. There's always a weekly range and a daily range, and this is why I have it on my screen all the time. You can look at the daily range. I need to get rid of all these lines. You can look at the daily range because it's distracting. Always clear your screen so you can see what's happening with price. I'll put the lines back, don't worry guys. Yes, as you can see, this is a weekly range right here. Some people say, oh, you claim to trade without using any indicators. You claim to, but you have indicators on your screen. These indicators are not telling me to buy or sell. They are just trying to help me make my work easier and faster. Okay, I can easily calculate this myself. For example, if you see, it says the daily range for the past 3 days has been 31 pips. I can easily go for the past 3 days, look at the daily range for the past 3 days, divide it by 3, and I have my answer. But I just use this to check because it's faster. Okay, on Friday, what I'm looking for is the average daily range of 30 pips. So as the day started here, the daily range. Okay, let me highlight this place. On Friday, the markets opened here. Now, because I have my daily range here and I know how much on average I should have that day, I'm thinking to myself, the moment the market opens, I already have an idea of if the market is either going to go long for 35 to 40 pips, for 30 to 40 pips if it extends, or go short for 30 to 40 pips. It's that simple. And you already know how much space you have going up or down. Simple. Nothing extra. No indicator needed to tell you. That should, and looking at the trend, even if you look at the 1 hour, that should also give you another helping hand. Look at this low was broken. Look at the direction of the trend. It went up this point without even making any analysis or anything. You can enter short from somewhere like here because you know that the daily range is almost filled here. but it needs to break its daily range and break this high for it to become a long trend. So that's two negatives. A positive for you to go short is, even though it goes long and it hits its daily range for the day, it can start dropping from here, because that is its average daily range. That has been the average daily range for the past 3 to 5 days. And majority of the time, the average daily range continues. And the reason why the average daily range continues and the weekly ranges continue the same, for example, the weekly range of a pair can be 600 pips a week. So if a pair has moved 300 pips on Monday and moved 200 pips on Tuesday, for Wednesday, Thursday, and Friday, you know it's gonna share the remaining 100 pips, or it's just gonna consolidate moving around, and then Friday just end somewhere. The weekly ranges cannot be broken. The brokers, the markets can do everything against you, but they cannot change the weekly and the daily ranges, unless the only reason why they can change the daily range is maybe like economic events or whatever. But the weekly range are stagnant and they stick and stay there. They can't be changed. They can't break those rules, because they have a, because if they keep doing that, they're going to mess with the economy. Okay, so they have a financial agreement that makes them do whatever they want to do as long as they do it within this range. So you just being aware of your daily and weekly ranges can help you become a better trader, can even help you know what direction to go towards to. Just that simple thing. If you like put 20 indicators there, it's not going to help you with just knowing that. So that just, you can do that by, without any indicator. Just clean your screen, nothing, no lines, no nothing, no indicator, and you already know how much, where is this going, where is it most likely going to start reversing, where is this high of the day going to be, where is this low of the day going to be, just by knowing the daily range. Just that simple thing. And most people, another mistake they tend to make is they take trades in the middle of the market movement. The reason why I have this timer right here is so that psychologically I can keep to what is going on. Because if you look at, for example, if you look at this candle right here, and please pay attention, this candle was bearish at one point. It was bearish of about 8 pips down, and then what did it close as? A bullish candle. This is how the market fucks with you again. If you cannot wait till a candle closes, either on the, it doesn't matter what time frame you're on, even on the 1 minute time frame, the 30 minutes time frame, the 15 minutes time frame, the 1 hour, the daily, if you cannot wait, and it depends on what you're trading, what time frame you're trading. If you cannot wait for the candlestick to close before you make your decision, you get fucked or trapped in the zone. It still went short, but it's all mind games. It's all mind games. Now most people would have seen this candle and thought buy, 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 especially with this engulfing, buy, buy, buy. That's what he would have thought. It's all mind games. It's all mind games. And this is why I prefer hedging also, because even if they do mind games, no matter what they do, me knowing the daily range, I can always hedge out. Think about it. Think about it. If you know the daily range, you know how much it can go up for that day or down for that day or that week, then why, and you know the direction, especially the direction of the trend. That's the first thing I check when I open my charts, the direction of the trend. You know all these things, then why should hedging be hard for you? So I can see, keep on asking me questions, send me questions on to my email and I'll answer them. Okay, let me check another email. One minute. I try, so I'm not sure whether it's my understanding from the other side. Not sure what the difference is, but those one of them. I would like to think in order for people that speaking. Okay, someone asked me. Someone asked me. Um, yes, someone asked me, and with all this, I've done it without bullshit support and resistance. Without bullshit support and resistance is like an imaginary. I don't even know what to call it. Fuck it. Anyway, now before I get to what is system A and system B, I want to show you something else. Something else that can just help you in any other pair. And thank you for the messages I got. I'm okay. My accident was in the car got fucked up. Luckily, it wasn't Nathan's car. That's a Rolls Royce. That have been fucked. But I'm okay. Everyone was okay. Thanks for the emails and the messages. Okay, so let's go and get on to the next level. Okay, where are we? 109.5. These are just simple price points. They even work better than your bullshit support and resistance. I'll show you. Okay. Okay. So now, guys, did I draw any support here? No. Did I draw any resistance here? No. Did I draw any support here? No. What happened? Price and the market is reacting to price. Simple as that. That can beat any support or resistance bullshit you have just by putting whole prices. Why do whole prices react? Whole prices react. For example, if you go to the market and you have $20, or you have $10, or you want to buy something online, and let's say you go to a Japanese website, and will you see something like 108.824? When they make notes from the banks, it's in whole numbers. So psychologically, these are bank levels. These are the levels they are looking at. Okay, where is the market closing at the end of the day, or at the end of the 4 hour, or at the end of the hour, or at the end of the 5 minutes? What price is the market closing? Most especially the 4 hour and the daily. Where did the price close? Where did the price have a little bit of resistance? That's where the word support and resistance came from. Here, the price started resisting. The market started resisting its long trend at the price of 109.9, 109.5. Pushed back down to 109. Found out, like I said, pulled back. Found out that the currency was still weak, and then settled at 108.5 and consolidated there. Before there was news, and the market shot up back to this price point and is consolidating at which price, and started consolidating at which price? 109.5. Push back down, but now going to retest 109.5 again. And the reason why I feel is going back to retest 109.5 is because if you check the strength of the dollar, the currency itself, it is still strong. The yen is also strong. And if both currencies are strong or both currencies are weak, expect consolidation. Simple. Simple. Nothing there. Let's move on. Yeah. So, yes. So someone asked me, what is the difference between system A and a system B? Now, I'm sure after you say this, you go back to my YouTube channel and you actually notice this, because I notice some people don't notice. They don't even know which one is a system B and system B from just watching the YouTube channel. A system A trade is a short trade taken within 5 minutes or less. If profit isn't taken in 5 minutes, we do something, okay? And if there's a pullback or a little drawdown, we hedge out the trade. Or if there's a sudden change of trend, we hedge out the trade. And all this is calculated, okay? It's all calculated, which means there are certain things we look at on the software, this software itself, the MT4 software, not the numbers or anything. For hedging, I mean specifically for hedging, there are certain things that the MT4 has provided for you for free. No indicators needed. The MT4 has provided, but you guys don't explore the MT4. You do not explore the MT4. You do not explore the application itself, but you always want to put the rainbow colors on it. You want to customize the chart screens. I would say over 60% of what you need to be a better trader is for free, just on the MT4 terminal. There. But nobody checks it. Nobody teaches anything about it. Nobody posts anything. Everybody's just, oh, how you use Bollinger Bands, how you use this, how you use that. You know, free indicators plastered all over your screen. All you need is there on the MT4 application, but you don't look. Anyway, students know what I'm talking about. Yeah. So it's all there on the MT4 for hedging. If you sit down enough, study some of my videos for free, even if you couldn't afford the course, challenge yourself. Every day, when I was learning how to trade, I was on the chart every day. Sometimes I wouldn't sleep for 3 to 5 days, just so I would recognize a pattern repeating itself and I wouldn't miss it. Even if you're on demo now, look at the chart every single day. My system A and system B is based off only one pattern, both for buying and selling. And sometimes I can both buy and sell at the same time and still come out of it, just from looking for one pattern. Not I'm looking for a shooting star, a break of this, a break of that, this or this, or that or that, or the technical jargons. Just one single pattern. That's what my system is based on, and it has a reason. So what a system B trade is, for example, you have a system A trade, it failed and it pulled back, you know, there was a change in trend. A system B trade is you look back on that system A trade. Once you've identified the trend and it favors towards that system B trade, you take it for profit. Now, how many pips can you take from a system B trade? It varies, because a system B trade can be 20 pips, it can be 30 pips, it can be 100 pips. It varies. But as long as you know the trend, which is easy to identify, I just taught you a simple method on how to identify it. It's not like I went full in depth on it, but this should help you at least. Sorry, I lost my I lost my train of thought. Um, fuck. Yeah, yeah. Yes, once you identify the trend, someone reminded me. Once you identify the trend, all should be easy. All will be easy. I think the main thing about trading is just identifying the trend. The major thing about trading is just identifying the trend. That's all. That's everyone's problem. Once you identify the trend, just find a simple entry. Or you can be a scalper and simply just look for patterns. Simple. There's nothing there. Every pair has its pattern. Now, another thing I like to address is using the same system on every pair. Madness. You want to use the same system you use on GBP card with Euro USD. Like, different markets, different countries, different situations, but you want to use the same system. And then you say, oh, I've been trading for 5 years, 10 years, 20 years, I've not seen it. Like, sometimes write down what you are doing and ask yourself, does it make sense? Does it? Well, everyone, whatever. So what else? Let me check more questions. More questions. Let's see. iPhone. How long have I been on this live? Let me see. Sorry, my iPhone is a bit slow. Just gonna check it on my PC. Okay, let me check it. More questions. Come on, phone. Okay, checking it on my PC. Yeah. Sorry, I'm just replying a student. And if you sent me an email before and I haven't replied, I am getting so many emails. Okay, so it's not like I don't want to reply. Sometimes it just moves so fast, I can't really find the email back and I forget. So if you sent me an email before and I haven't replied in a day or 2, 3, please send it again. What's wrong with Gmail? Logged me out. Can you imagine? Sorry guys, just give me like a minute. I got logged out on my email. I want to check some more questions. Yes, someone asked me. Yeah, asked me. What's wrong with Gmail? Keeps logging me out. Yes, someone asked me. Yes, so I introduced, because I've been getting this a lot, and I've been getting this a lot, and I've been getting this a lot. And I decided, why not? Because I feel it would be really useful to a lot of people. I decided to introduce an in-person course, which means that you take the course for a 5-day program, meet me in person, and ask questions. You still have access to call me whenever you want. You get the benefits of the lifetime and lifetime signals also. Okay, so that would be like a classroom. It can be in person. We can set up an event, or if you want it to be private, just you, it's gonna be there. Okay, and I'm probably gonna give a discount. I currently I have a 15% discount anyway. And yes, the video course will still be going out at the end of 2019. I just want to move away from it. I just want to be, because I want to have the ability to teach. For example, when people ask me questions, I just want the ability to just go straight on the charts and answer their questions. Okay, it's hard explaining, oh, typing a whole long list, typing this, typing that. I would prefer to have students that I can interact with. Okay, show them this, that. Just like I'm explaining to you. Imagine if I just came and I started writing in a whole text. I don't believe in Forex books. It's all bullshit. They are just putting pictures of whatever favors their example. Okay, it's not live. It's not, anything can happen. New things can happen. Things repeat, yes, but the patterns in which it repeats are never the same. They are never the same. That's the problem. So if you're reading books and you think it's gonna happen the same way, you are setting yourself up for failure. So I don't like texting back and forth. So I decided to, in addition with doing the in person, over the internet, I said, why not do it in person, like in real life, physically? Can be taught. Look at my PC. I show you on your PC. I look at what you are doing. I correct you. Set up your charts. Show you how to set up your charts. Show you exactly on your own PC, on your own charts. So that's going to be coming in January 2020. And if you want more information about it, or you want to buy the course, you can just send me an email. Sorry, just taking like 10 seconds to reply a student right now. And yeah, let's move on to another question. Send me questions about trading. Another question. Let's move on. Where is this? There's a question from. There's a question. Okay. I said send me trading questions. I don't know why you're asking me this. This isn't a trading question. Okay. Why do I like trading the USDJPY? Okay. Oh. I like trading the USDJPY because it is the easiest pair to trade. Why is it the easiest pair to trade? It is the easiest pair to trade because it rarely ever breaks its rules. Now, I remember when I gave a free analysis, I think it's a week or 2 weeks ago. I think you should check. I've given two analysis in the past 1 or 2 weeks. I spoke about this area. I spoke about this area and I said if it breaks this point, it's going long. I don't know if you can remember, but please go on the charts. I'm gonna check now and tell you the name of the video. Go back and check it. Just check the last. I gave a free testimonial. Oh, sorry, a free analysis. Yes, let me check. I think just check one of those analysis, and I told you if it broke this point, it was going long. Now I don't know if you've been here from the beginning of the live or not, but from what I've said so far, you should be able to easily, if you've been paying attention, understand why I said this point it will go long. If not, you haven't been paying attention. And if you want to get my course and you want to get the video version, I would strongly advise getting an in-person or private session online. Because what that means is, if you still can't get it at this point, what that means is your mind has been too intoxicated with bullshit systems, bullshit forex methods, that you can't even see the markets in another perspective. It's so hard for you. If you think everyone is trading the same retail trading methods, you're only fooling yourself. Some people have a whole total different methods that you've never even thought of ever that I've seen. If you cannot take a different approach to the market and you are following the crowd, tell me, what is the result of majority of the crowd in forex? And that's what majority are still following, which is madness, which I still don't understand why people still can't look at it and ask themselves that same question. But that's humanity for you. Anyway, now I explain again. Yes, the question was, why do I love trading the USDJPY? I'll explain right here. Because USDJPY, out of all the forex pairs, really, please pay attention, rarely ever breaks its rules. Rarely ever breaks its rules. Which means if it has a higher high and it's going on a trend with it continues with a lower low, it's not gonna break that higher high then break the lower low, which most crazy pairs like gbpjpy do. So I would say 99% of the time, 90, unless maybe there was a time Obama said something, and for example, because of Trump, this can just say whatever you want, anything can happen. Okay. And even with that, we know where to look for a break. That, okay, yes, like, I am prepared, because I had a situation, I think it was 2 years ago, where all of a sudden there was a news, not all this news you see on my FX books that is planned, unplanned news, and it just changed the whole direction of the market, the whole direction. Now some people say, oh, if something happens, how do you escape from that? It's all planned. If you know how to hedge, if you know your daily range, if you know the direction of your trend. I've still not, throughout this whole session, I've still not mentioned one indicator. If you know the whole the right direction of you should be able to hedge out of this easily. Especially these top two things: the direction of the trend and the daily range. Simple. Hedging is not that hard. Banks do all the time. Banks do it all the time. Hedge funds do it all the time. The reason why they are so good at it is because they have such a high equity. What I'm doing right here is teaching you how to trade. Even though you see some of my students, if you go back to some of my videos, I've traded with $2,000, $500, $100, and I've still shown the system being useful. So what I did was I took the system, broke it down for a regular retail trader. How can they use this banking and hedging system of taking quick profits and hedging? And the reason why I say you lose only commission is because the banks and hedge funds, they don't get commission. They trade free, zero spreads, everything, no spreads, trade free, just move whatever it is. So because we are trading with people who provide rates for us, we have to pay them commission, maybe in spreads, maybe in commission, whatever. Okay, that's just the way it is. If you were not being charged spreads or commission, you would hedge out of your trades scot-free using my system, scot-free. And I'll still be researching on that till I find a broker. One day I feel like, because brokers are getting better anyway, there's going to be a broker who's going to charge you no spread on all pairs and probably just charge you like $2 for commission round for a round trade, or 2 to 3 or 4. Brokers are getting better anyway. So that was just the concept of the system, taking a bank trading system and hedge fund trading system, mostly using their method of hedging from the hedge funds, and breaking it down and bringing it together for a regular retail trader. That's just it. That's just the NLFX system. Do you think a bank, or do you think the banks will be there putting Bollinger? Imagine you went to a bank and you saw them putting Bollinger Bands. The way you trade, would you want your bank? Ask yourself, would you want your bank to trade the way you trade, or would you want your bank to use retail trading methods? Simple questions you should ask yourself. And the more you keep pushing yourself towards the retail trade, the more you keep intoxicating your mind. Do you know how long it has to take you to free yourself from such shit before you start learning new shit? Nobody is a bad trader. I think Nathan Thomas said that before. Nobody is a bad trader. You're just using a bad system. So let me move on to another question. Oh yes, sorry, I haven't shown why it doesn't break through. For example, yeah, this is just an example of how USDJPY is so precise, so precise. Now look at this area. This is a consolidated area, right? This whole area, okay, and the market went short, and the market at this point right here decided that it's no longer going short. It knew from this point onward. Okay, let me make it easier. Press to see. It's new from this point, okay, I wasn't going short. I don't know if you can see, but there's a space here. It's about 0.3 pips. With USDJPY, once it knows it is not breaking up a low or a high, no matter how close it gets to, even if it's 0.01 pips, it will not break it. It will not. That is why I love trading the USDJPY. It really ever breaks its rule. If you are right, you are right to the end. And if you are wrong, you can find out early. This was a very good point to take a short. Very good point. I'm not looking at the price action. This price action to me is just coincidence. That was the past. I was looking at what was happening currently here. But some price action traders will still claim this. Let's move on to the next question. Wow, there are a lot of people watching. Didn't expect this. Over 600 people. How long have I been on this live for? Let's see. Oh, wow. Almost 50 minutes. Yeah, so I'm just gonna answer some more questions, and I'm gonna be here for the next 10 minutes, and then I should close this live. Let me just check some questions. Remember, guys, there's the 15% discount right now. Once the video version is off, it's not coming on again. I want to focus on being able to teach my students personally and help them. Let me see. Questions. Give me some time. I'm scrolling through a lot of questions. Scrolling through some questions. I want to pick a very, because I want this will be my last question. I want to pick a very, let me see. This is a lot of questions. I'm not sure to how did I come up with my system on the 5 minute chart? Well, I was looking for patterns. Trust me, I checked all the time frames. I checked the 1 hour. I checked so many pairs. Let's just start there. Okay. So many pairs. Euro card, gbpjpy, Euro USD, this and that. Do you know how many pairs I checked for me to determine what was best for daily ranges? Okay. I just received another question. I'll answer that. For me to determine daily ranges or whatever, I checked 5 minutes, I checked 1 hour, I checked 30 minutes, I checked 1 minute, I checked. Just keep on checking every day. Look for patterns. If you want to create your own scalping system, if you want to create your system, look for patterns that happen majority of the time. Now, once you found those patterns, don't feel like, oh, you are now the god of trading. It happened to me so many times. I found patterns, I thought it would work. Then I would try them live, and then it would be another story. All of a sudden, the pattern wasn't working anymore. Then my eyes will now be able to see a lot of places where it failed before. Okay. When you are looking for a working system, your eyes will mostly be directing you to what has been working. You would not see so many times where it failed. So once you find the pattern that works, wait. Look at it for 1, 2, 3 days, for a week. Watch for the repetition of the pattern. Did it work? How many times did it work that week? That should be your question before you jump and start losing money. I did that. That was a habit I had to stop. Once I saw a pattern and I thought, oh, I found the holy grail, I'll then jump on live the next day, lose all my money. Then I'll start seeing all the places where it failed. Now, I just received another question before I go off. How do I stay open? How do I sleep? Let me read this. How do you manage to sleep with a trade open of 150 lots? Because, number one, I don't show this when I'm recording. I already have my hedge set up. I already know where I'm going to hedge out of. Okay. And I have my alarms set. Everything written down. Before I take a trade, I know all the parameters. I know the daily range. I know the trend. I know whatever can happen. I can recognize all this. Because If you follow my system like a dummy, step by step, you should know this in within 5 to 10 minutes of looking at the charts. Okay. If you're not if you just follow it like a dummy, you should know this within 5 to 10 minutes. But if you fight with it, that's on you. You have to look at it afresh with new eyes. Yes. So I find out my trend, I find out the daily range, I find out what can happen if it goes against me, anything. So I set my alarm. What I do, I put the most annoying alarm. Okay, modify. I set this on alert 2. Set this 1000 times. Now if I want to hedge somewhere like, let's say here, 9745. Okay, where would I put my alarm? Let's say the price was down here. I'll put my alarm somewhere around these tips right here, where the price couldn't hold. Let's say 645, or I'll just say 6. And that's if it's far away. Sorry, that's if it's far away. Like, let's say the distance was like really far. Like, okay, yes, this one is far. This one is a bit far. It's like 28, 30 pips. I will do this. Set up 2 or 3. Okay. And just in case, I would put my hedge to hold the trade. I shouldn't have said that. But I'll put my hedge to hold the trade right there, just in case. Now, if it is something tight, I would surely set the hedge. Surely. I don't show this on the video, but the hedge will be there. Surely. Before I start recording again, I would have removed the hedge, because that is not for free students. That is for private students. If the distance between the current price you're in, and the hedge is close, I would set it before I sleep. Okay, just to hold it. And I would have already determined where the continuation of the trend will be for me to continue. Before the trend is triggered, my alarm will wake me up. The alarm is annoying, it's going to wake anyone, no matter how much of a deep sleeper you are. But just in case you don't wake up, my hedge would have been held, my trade would have been held, and I will not be losing anything. No matter what happens in the market, as long as I've held my hedge in place. I know some of you won't understand what I mean by held my hedge in place, but the students will understand. Once I've held my hedge in place, even if I wake up and the market moved 100 pips against me, 200, 300 pips, I would not be affected. My low drawdown will still be held. Okay, that's how I can sleep at night with 150 lots held, trade opened. It depends on the distance between my hedge point. For example, if it's here, I would set it before I sleep, obviously. But if it's way far here, it all depends on how the market is moving. I'll set my alarm, or I might still set it up here, but most of the time I don't, because I wake up because of my alarm. My alarm always wakes me up, always. So that's just me. But you if you want to sleep, you can hold the trade first. Hold the trade before you start hedging. Hold the trade first. That's how I do it. If you are not sure of yourself, hold the trade first before you start hedging. Only students will understand this, and unless you're smart enough, you should understand this too. Hold the trade first. If you want to sleep, set a hedge that will hold the trade first, so that your drawdown, for example, if you have a $2,000 account and your drawdown is $100 or $50, no matter what happens in the market, even if the market goes 600 pips against you, you will still only be losing $50 out of your $2,000 account. Simple as that. So anyway, guys, I'm about to go off. Hope you guys enjoyed the live session. Am I gonna keep this live session? Am I not? I don't know. Probably I'm gonna delete this. Most likely I'm gonna delete this. Hope you guys have a nice weekend and you have a nice trading week ahead, and I hope you enjoyed the live. It's closed Wow, this is a lot. 800 views. So thank you guys for being here. Thank you for the messages. I'm still alive, which is lucky for most of you guys, because I know some of you wanted to get the course later. So, and that's another thing about life. If you waste time, sometimes you might lose out on something valuable and never have the chance to get it again. Sometimes in life you have only one chance to do something. You know, that's just life. So this is my first live. I don't even know how to stop the live. Let's see. How do I stop this live? Okay, all right. Hope you guys have a nice one. If you have any questions about the course, you can send me an email in the link to the description, or you can go to the website if you want to buy the course to check the services right there. Hope you guys have a nice weekend ahead and a nice trading week ahead. Merry Christmas and a Happy New Year, and whatever holidays you celebrate. From Solomon, and see you guys soon.